Fortis Microfinance Bank, one of the leaders in the microfinance subsector, has clocked 10 years in operation. Fortis Microfinance Bank has a national license to operate anywhere, including Abuja. The bank has presence in over 20 states of the Federation, and it's one of the only two microfinance banks that are listed on the Nigerian Stock Exchange. I'm now being joined by the Managing Director and the Chief Executive Officer of Fortis Microfinance Bank, Tiko Okoye, from our Abuja studio. Good morning, Mr. Okoye. Thank you very much for joining us.
Good morning. Thank you for having me.
Right. 10 years of operations in the Nigerian market. What has been the journey so far?
Exclamation marks. Exciting, exhilarating. And I think I'll just start by giving a basic history of this is a bank that started in October 2007 as a Category 1 unit microfinance bank, 20 million share capital. And then 4 short years later, it got listed on the Nigerian Stock Exchange and then became a state Category 2 state microfinance bank. And by 2015, transformed into a Category 3 national licensed microfinance bank. Today, presence in 22 states, and we also have about 63 locations, 200,000 clients in outreach, and they're still forging ahead. So I think it's been a long way, but is this why we are celebrating? Not exactly, because we're also looking at the impact, the social impact. And then I can just look at the social impact on directly on the end users, the outreach we have been able to achieve, and then the individual capital gains that have been made, as well as the job and wealth creation for these end users, and finally the improved living standards. And then on the financial institutions, the other microfinance banks, we provided an effective, profitable business model from outreach to the underprivileged. And finally, to the financial systems, we have been able to mainstream a lot of people from the financially excluded to financially included. And that has helped the central bank in terms of monetary policy implementation. So we have a lot to talk about and a lot to celebrate.
Well, talking about all these achievements and a lot to celebrate. Now, you didn't achieve all of this without some kind of challenges. So what are the major challenges you had to deal with in doing this business?
I think the top of the hill will be the harsh operating environment. For microfinance banks, it has been determined that the operating expenses are about 50%, 15% of the total revenues, and this 10 times higher than for deposit money banks. So when you look at the high operating expenses and the fact that the loans are small sized, you can see that the transaction costs are really very, very high. And you're talking about financial sustainability, the need to cover your operating costs so you can remain sustainable and remain in business for a long time to come. And of course, there are shortages of expertise because the microfinance subsector is totally different from the commercial banking sector. We also have issues with financial illiteracy. Most of these things are bottom of the pyramid, and we go out there and are financially illiterate. So we have to go the extra mile to also not only give them credit, but also to do other advisory services, like trying to make them financially literate. And last but not the least, in fact, it's the biggest, is the lack of intermediation funds. Because microfinance is driven by high growth rate and strong capital supply. The market is there, but where's the capital? That's the missing link.
Now, there's the issue of collateral. And in dealing with some of these small businesses, having to get the collateral seemed to be an issue. How were you able to deal with this all these years?
That's why I said that microfinance is a different ballgame entirely from the commercial banking. Because in microfinance, the platform is actually social collateral, because these are people who don't have any form of collateral, or even if they have, the collateral is what you call dead capital. It cannot be registered for anything, it's of no use. So what you do now is, in microfinance subsector, you have group lending methodology where there's peer pressure. The members cross-guarantee themselves and ensure that if somebody defaults, then the entire group will pick up the slack. And that's why you find that the default rate for microcredit is very, very low compared to other forms of lending. And so when you look at that, plus the fact that there's more responsible lending, and the fact that the sector itself is growing, then you find that the default rate is very, very low indeed.
Now, Fortis Microfinance Bank had planned to raise about 10 billion naira corporate bond on the floor of the Nigerian Stock Exchange. What's the situation with that bond issuance?
Oh, well, it's still ongoing because we're trying to make sure we dot our I's and cross our T's properly. You know, we are driven by one vision. In Bolivia, the Banco So, microfinance bank, is quoted in international literature as the first in Bolivia to go to the capital market to raise for the first microfinance bank in Bolivia to raise funds from the capital market. You go to Indonesia, you have BRI, Bank Rukyat Indonesia, the first microfinance bank to raise funds from the capital market. So what Fortis is trying to do, we are on the cusp of making history. The first, arguably the first microfinance bank in the entire African continent to go to the capital market to raise as much as 10 billion naira by way of corporate bond. That is something worth celebrating.
Right. Well, the central bank talks so much about financial inclusion. Using your organization as an example, what role do you think microfinance banks can actually play in ensuring financial inclusion in Nigeria?
Let me use an analogy and say that microfinance banks are kind of galloping into where even angels in the form of the commercial banks dread to tread, because this is your charted territory, high illiteracy rate, you know, perceived high risk of economic activities, and then you have these microfinance banks because they are at the base of the pyramid. They understand the cultures of the people. They understand the nature of the activities there. I think they are best positioned, and I think that's what policymakers have come to realize. That's why they've been pushing this financial inclusion through the microfinance banks. And there's still more to do. I mean, the collaboration and partnering, whether it's bottom of the pyramid, whether it's the micro and small enterprise development fund, the bottom of the pyramid of the Bank of Industry, Development Bank of Nigeria, people are now aware that the best way to do this is to do it to those who are closest to the grassroots, and that's the microfinance banks.